If you want to know how many shares of YMAG you have to hold to make $100 every single week, you are in the right spot. Stay tuned to the end of the video for the calculation. But first, let's talk about YMAG. It's beaten down. It's beaten down about 12% over the last year. Is this the end of the fund? I don't think so. This fund has been doing extremely well. Some of the others in our weekly paying dividend account have not been paying very well, but YMAG is not one of those. Both YMAG and YMAX have been doing really, really well, despite the market being rocky lately. So we're going to do a full breakdown on this, see how it has been performing, and we're going to definitely see if that drip calculator shows this thing being positive or negative. If you like dividend ETFs, if you like monthly income, weekly income, you are in the right spot. Don't forget to like the video and subscribe so you guys don't miss any more of these videos. And so let's see how much money you need to make $100 every week from YMAG after we roll that intro. There are some bright sides to YMAG's price falling a little bit. Implied volatility typically goes up when the market is as it has been, and we can see a distribution rate of almost 53%. Now, your total take-home rate won't be 53% because we have seen a little bit of price reduction, but that's okay in my opinion. If you are getting anywhere above a 40% return, you're doing extremely, extremely well. Looking at just the point of YMAG from the YieldMax website, we can go through and look at all their distributions. It's really interesting how their distribution calendar works, but I'm going to pull that up on Seeking Alpha so we can see it from an outside source. Now, don't forget the Magnificent 7 funds that this fund uses to make all of its weekly dividends. I always forget one of them. We have Tesla, Nvidia, Microsoft, Amazon, Apple. Did I already say Nvidia? I think I did. I always forget one. We should actually be able to see it on here somewhere. But the whole point of this is income. You do have a little bit of exposure to the underlying securities, but not much. And there are some things I want to point out that may be a negative for these funds if you're interested. Now, one thing is the gross expense ratio of 1.3%. Now, people have been pointing out in the comments how this works. I don't fully know how the expense ratio works, I'll admit, but that it's already taken out when you first invest in the fund, which is a good point. That would make the most sense to me. I never really thought about it, to be honest, but it's not taken out like at a yearly fee or something like that, which I think is really, really important. It's just a fee based off what you're investing, and it's auto-pulled immediately. Now, this is a bit of a higher fee. But if the fund is going to return, 40-something% or 53% just based off of the dividends, if it can trade sideways, that's a phenomenal investment. You know, the S&P 500 averages 8 to 12% a year. That's average over the last like 30, 40, 50 years. So that doesn't mean you're going to get 12% every year you invest in the S&P. You're going to have good years and bad years. But, I mean, you're able to outperform the average of the S&P, which is pretty remarkable. Now, is it going to continue? I don't know. We've never really seen YMAG or YMAX or any of the weekly payers in this kind of investing environment. A red market doesn't necessarily mean they're going to drop like crazy. If we go into a bear, I could see them dropping pretty heavily. But this thing's got a lot of assets, 354 million, which is absolutely insane. And these ones just continue to grow. The weekly payers continue to grow. So we can see just the 1 month return. You have NAV versus market, 0.5% to a 6%. Then we jump all the way to 11, 11.5%, 15 to 16%. Year to date, not doing too great. But again, it's only been about a month and a week. And we have 1 year at 40 and 40. So pretty close, pretty solid. Since inception, 36.4%. Not bad by any means. So again, a little below 40. So it has had a bit of a loss because of that 12% decline. But the dividends have been really, really solid. And then we can see all of the holdings. Meta, okay. Meta, Apple, Amazon, Microsoft, Google, Nvidia, Tesla. I always forget, and I think these are bonds. I always forget a couple of those. And it's hard. Like, you try to remember them right off the top of your head. I just said them, so it's easier for you. But anyways, I like YMAG. It is still one of my favorite funds, and it has been the second best performer in the weekly dividend account continuously for months on end. So I do think if you're going to look at a weekly paying fund, this one's probably the one to look at, as well as YMAX. Let me know what you guys think. Roundhill has been doing okay, and Defiance has been doing terribly. If you're interested in the full breakdown, I keep referencing that account. I'll link it at the end of this video. Jumping into Seeking Alpha, we can see YMAG currently about $18. But the dividend yield is roughly 40% with the forward payout of $7.34, which means you're getting paid $7.34 every year if you hold one share. So really solid, really large dividends. I love them. I love the weekly payments. And here's the really important thing with YMAG. There are only 7 YieldMax funds in this fund. So when you look at YMAX and the consistency of the dividend, you're not going to get that from YMAG. And the reasoning is there is 1 week out of every month where the only fund that pays out from YMAG is MSFY, the Microsoft YieldMax fund. And so every week we can see we get here, then 3 good weeks, then boom, 1 bad week, 3 good weeks, 1 bad week, 3 good weeks, 1 bad week. So the reasoning behind that, again, that there's only one fund paying out at that time. And the way this works is this fund just holds those 7 funds. That's why the expense ratio is a little bit higher. So you can't be upset by the dividend. I mean, you can if you want to, but it's not really worth it in my opinion. It's expected, and it's still putting out some pretty insane dividends no matter what. So here we can see the low one of 5 cents, then 10 cents, 19 cents, 18 and a half, and then it's probably going to be another low one, but again, we can predict it. We anticipate that, so we're not shocked. But since this thing went to weekly payments, it has been really solid. I've really been happy with the return from both of these, even in a rough market. And I think if you know what you're looking for, which is income investing, this is probably one of the best ones that you're going to get. You don't have an insane, NAV erosion. Your capital isn't losing 3% every single month like some of the other ones are, Defiance. And you're able to recoup, you're not really getting losses, but you're able to recoup those losses on the actual just decrease of the value in the market with the distribution. So if you're still getting a 30-40% return, it's really, really solid. Now, what return are you getting? Let's check that out by throwing this into a drip calculator and seeing if the dividends are really outperforming that drop in price. All right, we are on dividendchannel.com. We can see we're going to chart 10K invested hypothetically into YMAG at the inception of the fund. But remember a key thing. YMAG has not always paid weekly. It's only been a couple months of weekly payments. Prior to that, it was monthly, and they really were not performing well when they were paying out monthly. They weren't performing terribly, but just not to the extent of how they're performing now, paying weekly. So with Drip On, had you invested $10,000 January 30th of 2024, you would actually be up 34.11%. You're yielding roughly, or an average return of 33% every single year. And your ending investment is $13,411. Really, really solid. With Drip not on, you still have a total return of 29.4% and an average annual total return of 28.66%, which I think is really, really solid. You guys know I'm a huge fan of Drip. You guys know I'm a big fan of YMAG. Put the two together, I'm going to be a happy guy. I like how it's working. I like the Mag 7. I like weekly dividends. I like YieldMax. I'll say it. I wouldn't always say that. I like YieldMax now, primarily the weekly payers, but there are some other ones that are really good as well. But still, I really am impressed with how these have been performing, as well as you guys in the community. You guys have been amazing at pointing out the new weekly payers because there's so many. We have 2 new ones from YieldMax that I'm really, really hopeful for, one of which is already performing pretty well. And I just think that the history of ETF investing is weekly dividends, to be honest. And you guys are a big component of that. Everyone likes these. They've been doing really well. We've seen the AUM grow. We've seen popularity grow. My channel has grown significantly because you guys like watching this content, which I really am grateful for. Thank you guys so much. I can't even believe it. We passed 7,000 subscribers yesterday. It's just insane. I was under 2,000 at the beginning of 2024. So I thank you guys so much. I really hope you continue to enjoy content, and I always want criticism in the comments if you guys have any questions or things you think I can do differently or improve on. Thank you so much. Now what we're going to do, we're going to throw this into our calculations. We're going to do a best case scenario and a worst case scenario because $100 every week from YMAG is super doable. And I think a lot of people would really do good things with that money and with that income flowing to just as supplemental income, side income, your side hustle, you could even say, even though not really, you're not really working. It's passive income. Well, let's run those calculations, best case and worst case, and see what you need for that $100 every single week from YMAG. Everything is plugged in. $100 coming from YMAG. I'm going to walk our way up to it to see how much we actually need. There are reverse calculations you can do that are easier, but it's less fun in my opinion. So everything, individual stock, it's paying out weekly, but we don't have drip on. That's a factor because we're going to use this $100. Whether you're dripping it into something like VOO or SPY or into a different YieldMax fund or into whatever you want, we're going to move the money out of YMAG. This is just either to live off of. Maybe you want to pay some bills. Maybe you want to pay rent, your car payment, anything like that. So we can see one share. We're also not including taxes on here because I can't calculate your taxes. Your brackets are all different. You guys are probably paying more in taxes than I am because you're probably richer than I am, let's be honest. We're not going to increase or decrease anything because the 33.27%, it's our lower return because that's what we've seen in the last year. Now, again, we don't know if it's going to predict the future, but I'm going to calculate it based off what we've seen rather than any fathomable number that we haven't seen yet. So with all of this plugged in for 1 year, with one share, you're going to get annually $7.11. Now, we need $5,200. We have a little over 52 weeks in a year, so we need $5,200, a little bit over that actually, to get that $100 every single week. So we're going to need to ramp this up a little. I mean, a factor of 10 is not really going to help us. We're now up to $70, which is still pretty remarkable because what? For $180, you're getting $70 every single year. Like, that's pretty impressive. With $100, you're now getting $710 every single year, which is great. Honestly, that's very, very solid. Total dividends received over that first year, $600, which that might be the number we actually want to focus in on. But we're going to kick this up. Let's go 250. We're going to really start seeing it jump. So in 250, you're getting $1,500 over that first year period, which is great. But we need far more than double this. So let's go to, we'll do 500 and see how close 500 shares gets us. Now, 500 shares is $9,000, and that gives us $3,000. So again, we're getting closer, but we're not there yet. $600. Our initial investment of just a little $2,000 more. $10,400 investment gets us 36. So really, we're going to need to go quite a bit more. Let's go 900. I might overshoot it here. I did. I overshot. 850. 850. 850 is almost perfect. 875. There we go. 875. So with $15,811 on our lower end bracket of what YMAG has been performing, or how it has been performing, we can see your total dividend payments over 1 year is $5,260, making you a little over $100 every single week. But there is more. Let's do just based off the dividend yield and see if that calculation is significantly better. I think it's around a 50% yield. Let's jump in and see. It's a little more unrealistic, but hey, it's for fun. Let's check it out. Everything's exactly the same. I just changed the dividend yield, which is actually our total return amount. Now, I always get comments saying it's not going to happen because of this or because of that or because you don't know and it's going to just keep losing money. And I understand that. That's why I did just based off the drip calculator, because that includes the amount that it lost in the last year, despite, you know, the market is beaten down. So I'm not calling it NAV erosion. The market's taken quite a bit of a drop lately. So, I mean, look at NVIDIA's price. Took a hit. So that's why I'm factoring that in. This is just based off the dividend. So let's say that in 1 year, YMAG, even if it goes up and down all over the place, it ends at the same price point it was when the year started. Exactly even. And you got just the last dividend payout according to their calculation, which is just under 53%. So when we go to 1 year invested, here, we're going to go back. We're going to start with 100 shares. We'll start a little bit higher this time. And that's an $1,800 purchase, and you're getting $900. So we're going to have to kick this up quite a bit. Let's go to like 400 right off the bat. Wow. Very quickly, you're doing really well. $7,200 investment gets you $3,800, and we need that $5,200. So if we go to 500, I can't believe the difference actually, because what was the other one? It was $785. Man, we're already really close at 500. Probably 550 will get us there. 550 gets us there. So what? 200, 300 shares less with the ideal return that we've seen. Absolutely insane. So this gives you $9,940. You're going to buy 550 shares, and that is going to give you $5,264 in dividends every single year, which is absolutely insane. That's what you were paid out for the entire year, and that is just crazy. Absolutely insane. But that's the power of these weekly payers. The compounding, we don't have compounding on for this calculation, but compounding with these is phenomenal. It makes a huge difference, and I'm a big fan of Drip. I'm a big fan of YMAG. You guys know. I want to say thank you again so much for watching. If you guys are interested in the $100 from YMAX, this video is for you. And don't forget to check out our weekly dividend ETF account update. Last week was insane.